Today's the second of January. We are officially in 2025. This is Brad Matheny, starting a brand new year, making a commitment to all of you that I'm going to attempt to improve my research and timing models to deliver even more accurate and successful trading results for all of you. Remember, I started this back in June of 2024, roughly, doing these daily, not only to prove to myself that these work, but also to help you guys. And that's been my ultimate goal. So now with 2025 here, hopefully we're going to be able to continue to improve on this research, really to get you guys to start making better decisions and to learn to make essentially to become better traders. So here we go. 2025 is kicking off with a bang. We've got the S&P up almost 3/4 of a point. I had been predicting that we would be moving up into this topping pattern, but the low liquidity collapse in the market at the end of the year really prompted this low rotation bottom. Got a lot of messages about traders wondering, when we were gonna, or when I was gonna say, hey, it's over, it's not going up. And it really came down to this low. So it came down to this low on this red line. We had moved into this consolidation phase. We had set up this deep low and this deep high up here. And essentially within this range, we were consolidating, struggling for range. And I kept drawing this flagging formation here. I'll change it to yellow so you can see it. And even though we're outside of that range right now, I do believe that flag is still very valid. Okay, I really do believe that this is the washout low before the rally. And you can see here, I've got this rally mode going up into this area here, looking for my major top back over here. And I really do believe that is a very solid potential outcome. So I think we've rolled through this bottom essentially like this, folks. So here's our peak. Rolling down, that's a 1, 2, 3, 4 with a deep low, moving back here to 5 and higher. Possibly getting up into a new all-time high mode back over here right before the inauguration. So we will see how it plays out. We're also playing out in this deep kind of a flagging formation here. You can see right here. Try to make this a little thicker. Get rid of that. So 69, that's good. Come back here, make this 69. Or close enough. So you can see we have this excess phase peak pattern rolling across this flag. I think, if I could redraw this, let me come in here, go to highlighter, and redraw this flag pattern out across here, I probably would roll it a little more parallel to what we had back in this area. But again, I think it boils down to this apex level, which is 594. So 594.40, call it somewhere between 595.24 and 593.17. So I think this level that we're seeing right here with this is going to be the level I expect the SPY to try to come to over the next couple of days, trading days, and really try to find some. It could blow right past this level up into 600, 601, or it could consolidate right around this 590, call it 350 to 596 roughly. Could consolidate right in this range for a day or two before attempting to rally back upward. And I think we're really in that, early phase of money coming back in the markets. Liquidity is going to become deeper. The ranges, you're not going to see these big bars. Okay. These big, massive rotational bars are going to narrow back down kind of like what we used to see back over here before the election, going to be more along the lines of these styles. So you're going to get back into, you know, half, two thirds, 1% type ranges. You're not going to see these big, massive bars unless some major news event took place. This was the entire reason why I warned all of you to get to cash back over here in October, is because, we had a whole host of horrible, well, I don't want to say horrible, but big events playing out into the end of the year. And I perceived that a lot of money was going to be pulled away from the markets no matter what happened here. I mean, whether it moved up 20% or moved down 40%, being away from that volatility and being able to then target where we're at and what's likely to come in early 2025 made a whole lot more sense than big money investors riding out this incredible volatility. This move here in these last couple days over here should be a real big warning sign to you. When we get into 2.5% days, meaning the market moves, that's huge. It's absolutely massive. And we will probably be there as a normal range by 2028, 29. But right now, that's just a massive range. I mean, we do not get bars like this very often. And when we do, it's normally some sort of a major crisis event. You pay attention to this is what I call the Kamala crush. And you pay attention, folks, back over here, we literally just did not have those big, yeah, 1.5, 1.25. Those are pretty big bars too. But generally, we fall into this little, 0.5% to 1.25% range as a normal price bar range on the SPY. When liquidity is deeper, when the markets are functioning the way they're supposed to, and we did not get that back over here. This entire time frame was wild. And where did you end up as of the end of the year from the election? So here was our election day. We closed here. We ended up 2.87%. So if you had held throughout all of this volatility, yeah, you had a nice high up here. But again, it wasn't a great big benefit. Saving your money and buying back in here, you gave yourself an opportunity at a nice big rally. Okay, so QQQ is again moving a bit higher. Pre-market is 516. That's up over 1% already. I have a feeling you're going to see a nice little move over the next couple of days to the upside. Let me come down here and drag this down. We're moving back into that apex zone right over here. So again, 522, 524, likely an apex zone. We've already got the A, B, C, D washout moving into this zone here. We could consolidate a bit or we could blow right through. Obviously, I'm kind of suggesting that this upper new all-time high level somewhere around here or here would be very likely in the Qs, assuming this lower support level continues to hold. We do not look like we're going to get the breakdown, which is fine. We are kind of in that flagging formation with the mode here, but this flag, this A, B, C, D, E move suggests that we're going to be moving higher, not down into this low factor yet. This will come, but it's just not going to come now. It looks like it's lesser and lesser likelihood that we're going to get a breakdown mode. More than likely, what we're going to do is we're going to see something, and I'll draw it out for you so you can see. More than likely, we're going to get some kind of a new all-time high back over here, pause a bit, and then roll downward into, I'm trying to get my mouse to cooperate here, into some consolidation, widening consolidation range down. So into 2025, I expect that there is going to be a broader rolling type of a pattern where price could consolidate downward. I've talked about this. especially over on the SPY chart. So be aware that, we could easily roll into kind of a broad, and you can see it here, kind of a broad head and shoulders formation moving into a potentially pretty fairly broad pullback over here into 2024, or excuse me, 2025. Okay, now the Kamala crush low or the low back over here in April, may come back into play. We'll see how it goes when we get there. But I am expecting Trump's policies to be received with some excitement to begin with. And then the realization that austerity measures in government and making it more efficient, which is essential, in my opinion, also is like cutting off a 14-year-old with an American Express Platinum card. They yell and they scream and they complain about what are you doing, blah, blah, blah. In order to fix what is broken, there's going to be a lot of yelling and screaming and unhappy people. I think ultimately it's going to be good, but in the meantime, like I said, we could get this kind of moderate head and shoulders formation. And this level here, I'll drag this out. That's about the neckline. So understand. And then here we come down to, let's call it the mid level or kind of chest line right in this area. So we have a very interesting, there's my server. We have a very interesting roll taking place here where we may end up from where we hit the peak up here. We may end up back at the 450 area on the QQQ before end of Q2 2025. Okay, gold and silver rallying quite nicely. Big move here. You can see silver's moving higher as well. This is good to see. A lot of money coming back in. 2025 is a new year. I think this whole consolidation has been really a low liquidity, really price rotation. I mean, I still can't understand why, silver and gold collapsed from, well, gold from 3,000 level way back over here, almost 3,000 back down here to 25. I mean, that's a $300 drop in gold, a 10% drop. On what? On the election that was right prior to the election, right at the election. And again, what happened? What was the reason for it? I personally, the stronger dollar, changing the economy, the unknowns of what was happening. Yeah, I understand the volatility a bit. That's why I told people to stay away from and cut down your trading. But the reality is, I think we've got a lot of lost time here. If I could draw this out and try to kind of explain to you where we're at, let's just come from this point to this point, and you can see this is a linear regression channel. You can see that we're down in the lower channel area. We're finding that support. We're into our flag. We're about ready to break out. And to be honest with you, gold is more than likely going to attempt to make a run back up into this 2,800 or higher level into early 2025. So 3,000, 3,400 is still on target. And especially if we get a very strong rally, remember, I still believe we're in the excess expansion phase. And if my example is correct and we're in the expansion phase, we're going to see a rally, at some point. I'm not saying it's going to happen exactly like this, but that is, I guess that's as tight as I can get it. Oh, 2 hour daily. Little slow this morning, I guess, off the servers. But if the expansion phase does what I think, trying to get it in line here for you, then we're going to be looking at something more along the lines of a big, broad expansion up into these highs, possibly then pulling back, consolidating, and flanging into a channel out into this area. This is still all 2025. There's first quarter 2026. So again, normally in the expansion phase, and I'll mark this as the expansion phase. Normally in the expansion phase, we get a very big initial rally, taking off from early consolidation, rallying up into this area, consolidating, and then moving kind of into a flagging formation, like an excess phase peak formation, rolling upward. So if my analysis is correct, we're going to have a very big move over the next 6 to 9 months in gold, possibly up to 4,000 or higher. And it's just a matter of time. So we're going to see how that plays out. In the meantime, ladies and gentlemen, like I said, go back here to 2 hours and zone this back in. We're reaching that apex right here. We're in that zone 5 already, meaning we've rolled through this big broad cycle. We may get a little rotation back over here in the 2660, 2650 area for gold, but I doubt it. I think this is the move early 2025. I think we're going to get a nice rally out of this. Same thing with silver. Silver's flagging pattern was a bit broader out here. You can see where I've drawn it. Let me come back over here. You can see where I've drawn the flagging scenario. So silver's move here is going to be a recovery, probably up into this area, consolidating, and then a breakout. And that means that we're going to see silver back up at 31.50, 31.40. Nice little rally phase, bit of consolidation around the apexing level, right around 31 bucks. And then it's going to take off. It really kind of all depends on how quickly gold rallies through this move. But silver is looking very solid as well. Great opportunity here. Deep, deep lows. For example, I've been looking through some of these symbols that I've been watching, and SILJ, I've been telling everyone, you've heard me say it probably a couple of times, that I just love this deep low setup. Even a moderate reversion up here is plus 12% to 11 or $12. Call it 11.50, 11.75, back up into this low off of this deep low unwinding. I mean, I think we could easily be up into this $12 area. GDX, same kind of thing. I think we could easily be up into this, 12, $13, up $4, up 38, up to 38 from where we are down here at 33. We're already up 1.5% almost today. You've got your real estate making a big recovery today, moving higher. I think we're going to be moving back up into this area, 42, 43. XLE Energy has already started to make a move. Very likely going to target either this level here that I've drawn, or possibly get up into this area. That's going to be a very solid move, potentially up 2.57 to 6%. We're already up 1.3% today. Going to be a nice big move today. XLB, Basic Materials. I mean, I don't know how to say this yet. There have been no pre-market trades yet, but look at this collapse, okay? And again, look at the traditional channel, the cycle channel with the linear regression tool. Pick a level, because it'll average it all out, and then let's just pick a level here. So there's our normal range, right? We are very deep low and look at this move, these typical kind of recovery moves up into this area. Same type of recovery move here, even more to get it up into that middle channel area. So it looks like about a 17% chance to just move up into that middle area. Even if we were to fall into the downward channel cycle, so now understand it from here to here, we have a downward channel cycle. You are now looking at a target up in this area of 6.5% up to basically 89.50, assuming, that we continue into this downward channel. I personally believe basic materials are going to be looking at a resurgence in demand in 2025. I think that there was a lot of uncertainty. There's already a lot of money spent in infrastructure. I think that basic materials are going to become um, a hotter commodity. So understand that the world needs materials for growth and building. We might be a little bit of a pause in the early portion of 2025, but we're looking at some pretty good opportunities here. So again, XLV, healthcare, very deep low, looking at a good recovery, could easily move up into this area as a moderate recovery. We're already up close to 0.5%. And XLP, consumer staples, really big, strong rally after the low. I mean, yeah, the election right here kind of derailed things. But again, if you were to take a look at just a standard deviation channel and figure out where we're at, this is a very deep low. Okay. Even getting back up into normal areas would put us up into this 9-10% rally phase. Can have some very, very important moves to the upside. Now, understand that coming from this area, you still have a chance up 4.5% from where, almost 5% from where we're at, up to 82. So even in this downward channel, you still have a chance at 82 up here. If we break on some economic data, strong Q1, strong Q2, remember, we're going to have Q4 data coming up here in about 15 days. We could get a nice little rally. Q4s typically do very well, but we'll see how it plays out. We've had a very interesting December. I did some research. There's literally only been like one or two Decembers of election years going back to 1996, where we've had a deep decline like this, and one of them was in 2000. So understand that if we are at the top of the market, we will know very quickly. And if it is like a normal market where we recover back out of it, you're going to be looking at some kind of a move, kind of like this, into the end of 2025, meaning that we are going to get a very good Q3 and Q4 rally phase in 2025. Okay, last, we're going to come back over here to Bitcoin. Bitcoin is up 2,390. There's my data. Okay, spread this out. Really interesting consolidation back over here. And really, tried to show this to you on a 4-hour chart. We are struggling right at this level, trying to determine whether or not we're going to break down or rally up. So as we move into this channel, okay, we determine, the channeling here, this mode. I'll drag this out. And I'll try to drag this out. So there's our original flagging formation off of this peak. We roll back down here. We set up new potential flagging off of this secondary peak. This is a little lower flagging right in this area. So far, we'll leave it there. Got to get rid of those markers. Always show stats. Okay. And what we're looking at here, guys, is again this rollover type of top. We're continuing to stay within this range. Remember, we have this high level up here, very similar to the SPY. Really, it's very similar in the sense that we've got this high and this low. And until we get out of this range, we're trapped in it. So what happens in a mode like this is price continues to establish, new highs and new lows in a sideways range like this, giving us more clear opportunities. So we have a very clear marking here at roughly 99,550 and a very clear marking here at 92,300. The current breakdown level below this blue channel here that I just extended out would indicate to us that we are in a breakdown mode. And drag these out here, visual order, bring to front. We're in a breakdown mode, establishing a new channel. So generally, we are in a downward cycle trend on a bigger, longer term basis. On a shorter term basis, we are in a flagging upward zone right here. So where we're looking at, folks, is we are, really should be cautious of a breakdown. Try to get rid of these. We really should be cautious of a breakdown, potentially moving down into this area and consolidating, then breaking down lower. But as long as we hold above this level and continue to flag up, if we get above this 99,550 level, then we are technically in a bullish trend. So this is bullish right here. This is bearish right here. And this is our breakdown for Bitcoin right now. We're in this channel. It's a range from 99,550 to 92,300 roughly. In this channel, we are still fairly neutral. We are in a bullish short-term trend. We are in a bearish intermediate long-term trend. So this is a slight pullback. You're probably going to get we already got a nice little rally today. If this extends up, we're going to probably come right back up into this area, 95,550, and stall a bit. Okay, so we'll see what happens here. First trading day of 2025. Go get some and let's make this a great year, guys. Follow along. Share what I do if you want. That's fine. That's what Trading View videos are all about. YouTube videos as well. Let's make this a great year. Let's really focus on targeting profits and gaining success. Okay, guys. Talk to you later.